So a very competitive market. What are your plans exactly to stand out here in New York City?
Well, first of all, this has been our biggest online market for quite some time, Manhattan is. And we really look at our business market by market. And to compete and really serve our customers here, we need a big flagship presence. It's hard to come by, though, the space and the right location. So we looked a long, actually decades, to come up with the spot we have and be able to build a new building and bring what's really a modern flagship store, true flagship store that can serve the market and bring together not only our physical experiences, but our digital experience as well.
Well, what we've heard from so many people for years now is that retail is on the decline, especially that in the department store space. So when you say you're bringing a modern store to New York City, what do you mean by that? What is modern in a way that can actually bring foot traffic into your store here in New York City that can make the investment worth it?
Sure. Well, first of all, being able to build the building from the ground up, we can build the technology into it, the connectivity. Often in especially big urban cores and older buildings, there's not good Wi-Fi or good cell connectivity, and customers use their phone in particular during physical journeys as well. Customers don't think about channels, they don't think about physical and digital. It's just a shopping journey for them, and they are increasingly in control. So being able to build the building around these connectivity and bring digital into it, we know that over half of our store visits start online, and we know over a third of our online sales come from a visit to the store first. So making that seamless, things like alterations and buy in line and pick up and sale and same day delivery, these things are becoming increasingly important.
Why is it important to have such a large real estate footprint to do that? Because I know you've been very successful in LA with your Nordstrom local stores, which are a much smaller retail footprint, don't actually hold any inventory. How come you see this large presence in New York City as kind of necessary to achieve that synergy between online and in-store?
Yeah, well, we look at the menu of assets we have and that we can bring to bear to serve customers better. And it's really not about opening a store here. We look at it as a market. So to have a big flagship, and this is really special flagship. It's architecturally, I think it's something that's really going to be compelling. People will want to come visit. Merchandise-wise, we can do things we haven't been able to do in some of our other stores. But it's part of the mix we have here. Here in Manhattan, not only do we have our flagship store, we have two of those Nordstrom local stores that opened in the last month. We have two of our rack stores. We have the Trunk Club Clubhouse. And in all of those 6 locations, we can take returns from however we've sold it. We can do order pickups. We can do alterations, all of them. So it's really about leveraging the assets we have, big or small, digital or physical, to serve customers as they want to be served.
We keep hearing from analysts that we should brace for a new round of closures, industry-wide, once we get through the fall holidays. And is that true?
Well, I don't know about the industry. For us, we have 120 stores. We've had a few store closures each year, the last couple of years. And as the world changes, centers go up, go down. We've had a few, but for us, there's nothing unusual like a spike in closures that we're anticipating.
If the focus is so much on flagships, where does it leave the mall? What's left in terms of mall interest?
Well, I think there is a tipping point of you have to invest in the physical locations to keep them up to date, keep them modern, to have enough inventory in them. And there's a tipping point where the store is not compelling. One of the things that we've been working on our market strategy is connecting the stores in services and connecting in the inventory we have. Inventories are our biggest investment, and a lot of it's in stores, which is near where most of our customers live. And in Los Angeles, we piloted being able to connect all the inventory in our stores, both in LA and Orange County, 16 stores, where a customer can have next day buy online, pick up in store, and they could pick it up at any store they want, and including our local stores. So where we've seen the biggest lift is in these smaller stores, that they're more convenient for customers, but they want the selection of a bigger store, and being able to move the inventory around very quickly, which we have the systems ability to do that, and we're planning on doing that here in New York starting Thursday. We found the customers have really responded to that.
Is it becoming increasingly difficult to invest in a department store business model in the public markets? We saw yesterday the news that Hudson's Bay, the owner of Saks, being taken private in a $1.5 billion transaction. Of course, you had your own plight to try and become a private company at about $50 a share, which I think is about 30% below or higher, than where you're currently trading. Do you still believe that this type of investment and this type of movement forward for department stores is best served as a private company?
Well, we're a public company, and our focus is being the best public company we can be, and we're excited about the opportunities that we have. Change is part of it. There's no doubt our industry is going through a lot of change. We need to change. We've been an early investor in a lot of, especially digital capabilities, that has set us up well. Again, our market strategy that's we have piloted, starting to roll out. We're in position to scale that. It is working for us, and is really the model for the future for us. So for us, being a public company is great.
It's great, even though you did think about going private.
Well, we're a public company, embrace that, and are looking to be the best public company we can be.
Finally, I guess I wonder, just given the overall headwinds in the business, I'm sure you get it all the time. Are you not facing an uphill battle here? This store, the flagship, I'm sure it's beautiful. It's an awful lot of square footage. I'm sure it's not cheap in terms of paying for the lease. What do you tell people who say, I get it all, I get the omni-channel and everything else, but at the end of the day, there are seminal changes going on in your business that mean people aren't going to walk into a store at all? Well,
if we talk about New York, and I think this goes for all of our business, we don't sell commodities. This isn't something that people have to get through their day with. It is something that we have to create a want, and having newness, having a broad offer of fashion and price points is an important part of what we do, and certainly serving customers with great service is something that's been part of our history for 118 years. So does New York need another store? No, no one needs another store. Will a great store do well? Yeah. The thing about New York, there's opportunity here, and we need to be great. We need to be differentiated. We need to give terrific service customers haven't seen. We need to have a compelling mix of product that's unique to us. We need to serve customers in digital ways and physical ways. So we look at it, it's this tremendous opportunity, and something, again, we've been looking for decades, and we've had to be opportunistic to have the right location, the right box, and we're super excited about what we do. If we do it well, I have no doubt we'll be successful.